Hello, Tiernorts, and welcome to this daily market commentary for Wednesday, the 26th of June, 2019. I hope you are all having a successful week and have managed to survive Wednesday, which turned out from a crypto perspective to be probably one of the most volatile days I have seen in a very, very long time, if ever. You know, as an old FX trader, which I am, I know only too well how excited we get as FX traders when we see a 1% move in a currency pair on any given day, or if we had a 2% move, we start talking about major volatility, etc. Step into the crypto world, and a 2% move doesn't really garner much of a mention. In some cases, 2% move might just be a decent spread on some coins. So today we started off with a 20% rally in Bitcoin in under 24 hours. We had a move from 11,650 up to a high of around 13,870. If you're wondering what the equivalent would look like for euro dollar, which obviously is the most liquid pair in the FX world, that would be equivalent to a move from 113.50 up to around about 136.20. I think we all know in the FX world, that would be an exceptional move over the course of a year, let alone a day, but not so in the crypto world. So where did it all begin? Well, all hell literally broke loose from the get-go of the new trading day. Happened, started off in Asia, moved into Europe, and then continued during the US day. Once again, it's the same themes of the Facebook Libra project and the low interest rate environment driving the crypto market. Just to prove a point, if it's something I've been going on about in the last couple of weeks, but today I saw an interview with a leading economist at Deutsche Bank who surmised that part of crypto's rally was due to central banks becoming more aggressive with rates, and was happy to use Bitcoin and gold in the same sentence. That's mainstream Wall Street attributing the rally in crypto to some very real macro issues. Turn the clock back 18 months ago, and I think we can all agree that's probably not the sort of analysis you would have seen coming from one of the leading banks in the world. More conversations about tulips and bubbles back then. Who am I to say it won't end any differently this time? And maybe it won't, as you will find out shortly. But BTC aside, Ethereum decided to add an extra 17%, running up to a high of around $363 from a low of $314. There were a couple of exceptions. Ripple and Litecoin both languished and weren't able to get much out of the rally from Bitcoin and from Ethereum. Probably an hour left of the US day, and that we looked like we were going to be closing right near the highs. I was very happy just to finish writing the commentary, do this video, and head on out for an early dinner, and then all hell breaks loose. Bitcoin drops from a high of around 13,800 down to probably a low around 11,700. Yes, that is a $2,100 move lower. Then a quick $1,000 move higher, back up to 12,800, then back down to 12,000. All of this, I'd say, in 45 minutes. Ether does a similar dance, collapsing down to a low of $310 before bouncing back to around 325 and then settling around 320. Complete and utter madness is probably the only way to describe it. The obvious question everyone's going to ask is why. On this occasion, I can't give you an explanation beyond too far, too fast. We've obviously had a very significant rally today, which has been on top of, a pretty significant rally for the entirety of June, especially as this whole concept of Facebook and the lower interest rate environment has really caught people's imagination. Too far, too fast. Everybody tries to bail at the same time at the most illiquid time of day, and down we go. I think the positive I can take from this is we did net end up on the day. We did see a bounce off the low, so there were still people happy to buy the dips, which is encouraging if you're a bull, you want to see that sort of resiliency. But at the same time, the speed at which it corrected does sort of make you a little bit concerned and bring back some memories of early or very late 2017, early 2018. So it will be very interesting to see how this develops and whether the market consolidates a little here and liquidity returns. Moving on briefly to FX, which looks positively stagnant compared to crypto. The day started brightly enough with comments from US Treasury Secretary Mnuchin that, quote, we were 90% of the way on a China trade deal and as a path to complete this. Dollar yen would be the main beneficiary, running from 107.10 to a high around 107.77. Euro against the US also managed to make back some of yesterday's lost ground, trending back to 113.75. And the risk on currencies such as Aussie, Kiwi, and Canada all benefited, with Aussie up to a high of 69.95 and dollar CAD down to 131.10. Also, gold also going back some of its gains from the past week, trading down just below 14.02 before recovering back up to 14.12 as I close up for the day. On the equities front, both European equities and US equities kind of have a bit of a mixed day. The US equities were up across the board right to the very end. In the end, we ended up with the Dow Jones closing up 11.4 points, and down 11.4 points, and the Nasdaq up around 25 points. So technical analysis time. I thought twice about whether to redo this chart and really just focus on today's price action, but I think I've given you enough description of what that was. So, with the moves like we've seen today, it's fair to say short-term technicals can be blown through in a heartbeat, and I think anybody trading technically today on short-term technicals, whatever they might be using, would have gotten absolutely blown away. So, even with the late day moves we saw, I think it was better just to focus on the bigger picture chart for Bitcoin. I was originally going to point out how cleanly we have broken above resistance here, just above 13,000. As you can see, we did make quite a clean spike through there, almost $800 spike straight up through the 13,000 level, which was obviously fairly encouraging. I would imagine there would have been a number of momentum traders probably buying through that level. But I can safely say we also broke back through it extremely cleanly as well with that move at the end of the day. So I'm not going to say that's a pivotal point, but initially at least that will act as resistance once more to see whether the market can recover back up there. Beyond there, really the two main points are this line of resistance here, 17,200-ish, and then the all-time high, which obviously does depend a little bit on where you draw your data from, but somewhere just shy of 20,000 would be the level to look at there. To the downside, I haven't drawn it on here, but we did have quite a lot of resistance just ahead of the 10,000 level. So both psychologically and technically, we should see some buying interest ahead of there. I think, given what happened late in the day today, we should be prepared for an extended period of volatility and be looking at the major levels and make sure we have risk that reflects the volatility out there, because I think for a while we're going to see spreads get much wider and liquidity be at a premium. What a day! Hope you all survived. Hope it was a good day for everybody. And as the traders, we like volatility, and certainly from a crypto standpoint, we got it. So let's see we would pick that up tomorrow. Hope you all have a good night, and catch you tomorrow. Cheers.